Welcome to Investing with Data, a channel dedicated to using data for better investment decisions. My name is Sonny, and today we're going to talk about Sensex and Nifty, and why I think Sensex will is likely to cross 1 lakh in the coming years. So stay tuned. We'll discuss about Sensex and Nifty in general, what they mean, and what is the reasoning behind the expectation that Sensex can cross 1 lakh in the coming years. So let's begin. So let's understand the term Sensex and what it means. Sensex is an index, so it's not a stock; it's an index. It's some form. It's a weighted average of some underlying companies. So Sensex is the average computed from the top 30 companies. Okay, there's a formula with which it is calculated, but you can consider this as some kind of weighted average on the top 30 companies, right? Every 6 months, this list is revisited. So, for example, Adani Enterprise might enter this list in the coming months because of HDFC merger, right? There is a concept of free float market capitalization, with which there are many other criteria by which these companies are shortlisted in that list, right? But by and large, they give you a perspective of what the overall market is doing, right? So as of today, it is 65,000, around that number. Sensex is, right, and that's on BSC. Similarly, there's an index called Nifty 50, often referred to as Nifty, right, on the NSC. Okay, these two indexes were started different points in time. That's why the numbers are different. NSC's Nifty is around 19,500. Okay, and the difference is it is on 50 stocks. Sensex is on 30, Nifty is on 50 stocks. Okay, there are other indices which are on different stocks, but we'll only focus on Nifty and Sensex for now. So one confusion that people might have is they think that Sensex is more expensive than Nifty, or Sensex is higher than Nifty because Sensex is 65,000, Nifty is 19. No, that's not the case. These are two different numbers which are computed in different times and different ways. So you don't need to do that. But only thing that you need to understand is Sensex and Nifty represent the overall market's health. Okay, so by looking at the number, you get to know. Now, one more important thing that we need to look for is the economy's performance. So what is that number? That's called GDP. GDP is the total value of goods and services produced in the economy, right, in a financial year. Now, if the GDP is high, that means more consumption is happening, right, which will lead to more production, and all these companies which are there on the share market are going to be leveraging the benefit from that, right? Which means their performance is going to change based on that, right? So there's a strong linkage between GDP of the economy and the performance of the market, right? So in 2022, the GDP was around 3,380 USD, billion-dollar USD. Okay, and we will look into, and in the next part of the video, what we're going to do is I'm going to look into the data, the historical GDP numbers, and the Sensex values over these years to understand how is the relationship between the two, and then we'll also look into the projection of GDP and try to estimate how can this impact the future path of Sensex and Nifty. Okay, so let's get. So let's deep dive into the data. Uh, what I have on screen is the GDP of the economy from 2003 onwards, all the way to 2028. These are the projections for the coming years, and these are the actual numbers that we have. Okay, and I also have the Sensex for all these years. Okay, now one thing that we want to understand is there a relationship between this GDP and Sensex, and statistically there is this term called correlation. Okay, correlation basically means, are these two numbers closely related? Is it that if the Sensex is going up, the GDP is also going up? If it's going down, is the GDP also going down? Those kind of analysis. So in Excel, let's use this function called correl, which is basically going to use correlation. So I'll say correlate GDP and Sensex. Let's see what it comes. Very important. What it says is 95. 0.95 means 95%. Now that is very important. What it is saying is there is a 95% correlation between GDP and Sensex, which means the way GDP moves and the way Sensex moves, there's a 95% agreement, which means they move in the same direction most likely. Now, that's a very important insight. That means we can use this information to so we can rely on GDP as some kind of a proxy for estimating the Sensex. So let's do that now. What I will do is I have these are the projections by the IMF on what will be the GDP of the economy of India in the coming years. So what we will do is, so in Excel we'll use the trend function. A trend function is going to use some kind of a regression fitting line by looking into correlation to understand if this was the. So what I'm going to select is, this is my actual Sensex, and these are my actual GDP. So based on the relationship between this, tell me the estimated Sensex for this new GDPs which I'm telling. So that way we will get to an idea. Okay, so we're here. So what does it say? It says that based on the projection of the GDP, these are the numbers, and I can just drag this together. Perspective on, so on an average it is considering around 10% as the growth rate uh, for the Sensex. Okay, and this rate is going to be applicable for Nifty as well. Okay, that means by 2022 Sensex is very likely to cross the 1 lakh number. And that's what the YouTube video is about, right? Sensex will cross 1 lakh in the year 2028, right? That's what. So we saw, based on the GDP projection and the rate at which the markets are moving, it looks like by 2028 Sensex will be standing at 1 lakh. Okay, and that's a significant 10%, CAGR. On an average, moving 10% is a very optimistic number. We hope this trend is going to be, going to continue. We hope that the the IMF projections on the GDP are also going to be consistent with what is going to be happening. And it's very important for all of us to consider this, because remember one thing. The Sensex or the Nifty, these are the index which are created on the top companies of the economy, right? Which means that these, you can very safely look into Sensex and Nifty as an investment. While there is always an amount of risk involved, but historically, if you look at the returns of the movement of the index, the returns have been very, very stable, and it has been able to beat many big moments in the economic history, whether it is the 2009-8 crisis or COVID and all of that, right? So yeah, maybe I'll write another content on how you should invest on the index if you want. How can you participate in the economy's growth by being a part of the index without taking too much of risk that comes when you invest in an individual stock? So maybe I will make a follow-up video on that. But till then, thank you for being here and hope you like the content.